Hey, it's Dr. John Terry, and welcome to another installment of Tune Into Sales. I am the training director here at Legacy Marketing Group, and I am super excited today to introduce to you a not so new team member, but for many of you guys, it may be your first opportunity to get an opportunity to put a name and a face together. And we're super excited to have Kevin Meyer on with us today. So, Kevin, first off, I want to say welcome to Legacy and welcome to the Tune Into Sales podcast. And there's probably a lot of people that maybe know the name or maybe they've had an opportunity to talk to Kevin, but they don't know Kevin's backstory. So, can you kind of tell us how you got here and maybe how you really got started in this industry?
Yeah, well, first of all, thank you, John. And again, coming to the Legacy program here has been amazing. But my background, really, I've been in the business for 30 years. I was very lucky to have a father-in-law that owned an FMO. Didn't know what an FMO was actually just getting ready to marry his daughter, my wife. And funny enough, he needed some help building kits. So if you remember back in the day, we actually were responsible for putting the kits together, putting the applications and everything in. He needed some help doing that. And he said, "What do you know about annuities?" And I didn't know anything. So came in, started building kits and sat after work and listened to him talk to advisors. And, his comment to me was, if you like it, I'll give you a job. If you don't, at least you know what our family does within a business. And 30 years later, still in the business, still loving the business. I've held several different positions. I'm fully securities licensed, so I've been in that side of the business. I've worked for a carrier and an FMO. So I think the interesting thing for me is I just bring a different perspective because I've sat across that table from a client and had the cat or the dog rubbing up against your really nice black pants and talking to them about financial products. So I think the perspective that I try to bring to my role is I've sat on that side of the table and I really do understand what, the role of the advisor and agent is in this business from that standpoint.
Absolutely. And that's something I really value about the relationship that you and I have as we're working together is we both come from, the personal producer side, but we also have that IMO experience. We both have a securities background. So it really allows us to speak to a very diverse audience in terms of who we are and what we do. So, Kevin, if you think back to your start 30 years ago and today, what would you say the biggest change in our industry has been up to this point?
Wow. Uh, I, I I'll say this. There was a product, right, that we had. So this goes way back. The whole product was a brochure and it was a trifold. And the first two panels were about the product. The last panel was the application. And then if you flipped it over, the 1035 exchange form was on the back, and it was right that panel. And we used to get right that application in paper clipped with a check, and that's what the sales process was. And I think one of the biggest things that you look at the evolution of our industry is we have more and more compliance and looking at the products. But I think the real interesting thing is really when it comes down to it, where these products fit. And before it was really more of just a sale. And really, I think these products have really come into the evolution of a solution, a need, and really finding the need for the consumers that really have that need for that product.
Yeah, I 100% agree. And we've seen really the transition from the transactional sale of years ago. And I too remember the days of the trifold. And, we would get those in. Many years ago, I started an IMO before I even knew what an IMO was. I was a personal producer, got really good at my job, started training my competition, and carriers started coming in and saying, would you like to get an override to help train these people? And my immediate response was, what's an override? So there
Right.
was this learning curve that I had to go through, but I remember building the kits and the other things that are there. But you talk about the role of compliance and the fact that we're really transitioning today into more of a holistic approach. So if you think about your role with Legacy today, and what you're doing and how you're supporting the financial professional that's contracted with Legacy, where are you really focusing your energy and efforts right now?
Yeah, I mean it's a great question, and the focus of our efforts and at least my efforts is really taking the relationships that Legacy has. Again, Legacy's been around for at least as long as I've been around, if not longer, and taking the relationships that we have and the relationships that I've built over the 30 years, and not necessarily introducing them to the Legacy story, the amazing Legacy story that's been around. But really kind of reinforcing it and getting the word out there and bringing my background and what I've experienced over time and really trying to help apply it, not just to FMOs, but to advisors and having that communication directly, with the advisor and give my experience. And I wouldn't say expertise. I don't never feel like I'm an expert because I always learn something new every single day. But really trying to bring a different perspective and helping them with their business and how to expand their business, whether it be an IMO or an FMO. And I would say probably the biggest privilege that I get to do is, I get to work with the Annuity Ninja, who's hosting this podcast here on a regular basis. And again, it really has been an amazing couple months being with Legacy because I've always heard the Legacy story, the respect of Legacy. And again, we're not new in the business. But at the same time, I think a lot of people need to revisit the story of who Legacy is and what we bring to the table. And I think there's a lot of opportunity of things that we bring to the table within the market. So just really expanding those relationships and telling the amazing Legacy story is really what it is.
Yeah, there's still a lot of folks out there that I talk to that still think Legacy's an IMO. They don't understand the fact that, 30 plus years ago, we were the very first independent company designing fixed indexed annuity products for major insurance carriers. And fast forward over 3 decades later, we're still the only independent company doing that. And the fact that you've got one contract and multiple carrier access, that's a big deal. Now, Kevin, as you think back over your last 30 years and really where we've transitioned as an industry, we saw the Glass-Steagall Act go away, and now we've got financial professionals that aren't just doing insurance, but they're also doing investments. They're also leaning in and maybe having an opportunity to do some banking products, and they're doing estate planning. They're doing generational wealth transfer. If you kind of look at the industry as a whole right now, Kevin, where do you see financial professionals succeeding? And what's really working for the folks that are, let's just say, knocking it out of the park right now?
Yeah, I mean, I think the biggest thing when you really kind of look at it is the adaptation of fixed index annuities. And really, I mean, when you look at it, I think it was 2025, there was $128 billion of fixed index annuities sold. So really, back in the day, it was convincing people and understanding what a fixed index annuity is. And now it's not convincing them, but it's really just showing them the benefits, the features, how they fit in to a financial plan. And I really think, the main focus that a lot of advisors have been really succeeding with is looking at the benefits and the features of the products, not just, hey, this is a comparative to this, really where it fits and finding the product solution. The solution to the retirement need is really where our industry is headed. And like you said, you've got, people that are registered investment advisors that are really taking fixed index annuities into their portfolio. So I think that's one of the biggest things that I'm seeing within the industry, and that's really where people are starting to really kind of knock it out of the park and not just use it as, like you said, the transactional sale, but a solution and really the design of what the products were originally intended for.
Yeah, if you think about the consumer today, and you and I've had this conversation, and we've talked about this on some webinars that we've done together, is the fact that every day when the consumer wakes up, they've got these money problems they've got going on in their head. They've got questions about, have I saved enough? Is what I've saved going to last as long as I do? What happens if I get sick along the way? And all of a sudden it takes more money for me to be able to take care of myself at home. Those questions still exist. Fast forward from when you and I started 30 plus years ago in this business, those questions are still today. But the way we answer those questions and the way we bring solutions has really kind of evolved in the fact that we've got multiple ways to do that. Now, in addition to successes, if we look at the industry over the last 30 years, and especially today, if you were to look at some of the areas where you see financial professionals still struggling, and not having an opportunity to really get that breakthrough in the industry that maybe they're wanting to get, or having difficulties in engaging in conversations, whatever it might be. Where do you see financial professionals struggling today? What are their challenges?
One of the challenges, education, right? And really, when you kind of look at it, it's not just fixed index annuities, it's education in what financial retirement looks like. Kind of digging down in a little bit deeper into whether it's assets under management or insurance solutions. Really, spending the time because we have so many advertisements that are out there that, hey, annuities are bad. And the interesting thing is they're just making blanket statements. And, really, again, you and I've had the conversation where, we throw this word around as fiduciary and making a blanket statement that a product that can solve a situation is bad. And I think we don't spend enough time from an educational standpoint of really trying to teach clients and even advisors of what array they have within their toolbox. Because again, I think the interesting thing is the analogy of the hammer, right? If you look at the analogy of the hammer, not everything is, you know, fee-based, or not everything is one solution. So I think we need to educate, everyone on the fact that not a retirement plan is not the nail. And a lot of education needs to be done around that. And everyone's got different opinions. But again, I think our product line that we have really solves a need that so many people are looking for. And that's the biggest thing. I mean, the biggest concern that people have is running out of money. And as you know, a fixed index annuity is the one product, the one solution that can solve that need. Yet, even in the financial industry, we combat back and forth whether they're, a good solution or not the right solution. So I think it's really education is one of the biggest things that I see people struggling with.
Yeah, I would agree with that. And it's interesting as I look, and I'm constantly reading industry studies and looking at consumer studies to see what are consumers saying. Are their concerns, are their fears, are their goals or objectives changing? And we really haven't seen those change a lot over the last 3 decades. It's still running out of money. It's still worried about getting sick and not being able to take care of themselves, or being a burden on their family, or, leaving an inheritance to the next generation. We're seeing those things. And Kevin, I'm starting to see a phrase that we saw years ago starting to come back in vogue, building on this, education thing you were talking about, and that's retirement readiness. And that's a big word that's popping up in a lot of industry studies. But also, we're seeing that as people are talking to folks not yet retired, and they're asking that same question: am I retirement ready? Do you believe education serves a very important role in helping them understand what it means to be retirement ready? And what do you think that looks like?
Yeah, I mean, and it's funny because you and I have talked. So as you know, there was a study that was done by T. Rowe Price. And in that study, one out of every three US uh, workers are planning on working part-time during retirement. And the reason that they're planning on, really working in retirement is because they just don't feel comfortable. There are concerns that are out there, and their biggest concern is, am I going to run out of money? How is that going to work? How is my income going to work? I was in personal production over the course of the last 3 years, working with an agency. And the interesting thing is there were clients that would come in, 6 months, 12 months out from retirement, and actually ask the question, so how do I get paid during retirement? Because so
Hmm?
many people are so focused on every week, every other week, every month, I get a paycheck. And when I get that paycheck, I know how much is coming in, and then I allocate it out to the bills that I have, right? And so many people are concerned because there's this fear of the unknown. There's this fear of where's my paycheck going to come from? And I think as an industry, one of the things we really don't set the expectation for these clients is, how am I going to get paid? And how is this going to work through the longevity of retirement? So I think education is a big part of it. And it's not just the products, it's not just the solutions that we look at. It's more, what does retirement look like? And then I think the other side to it is what are you retiring to, not from? And I think that's one of the big questions that, we as an industry don't necessarily ask on a regular basis, but really, what are you retiring to? Because it's not a destination, it's a journey.
Oh, 100%. Yeah. Yeah. When I think back as you were talking, I think back to a friend of mine I used to work with that was a CPA, and he was part of an IMO that I worked with. And one of his statements that he would make when he would get up and speak to a group of financial professionals or he would speak to his clients, one of his comments would be, it's not just how much you've accumulated in terms of assets, it's how much income those assets can generate. And one of the examples he used I thought was brilliant was he says, can you imagine walking into a bar to be able to buy all your buddies after a round of golf a beer? And when the bartender came up and he handed you the tab, you took your lawnmower and you set your lawnmower up on the bar and said, okay, I want to pay for the drinks that I bought today for all my guys after the round of golf. Well,
Yeah,
the bartender's going to laugh you out because that's an asset. That
right.
lawnmower is an asset, but it's not very easily turned into income. And I think that you touched on something important, and that's helping consumers understand how they're going to be able to get that paycheck in retirement. Because once they stop working, whatever they've accumulated, they become their own employer in a sense. In the fact that those assets have to generate the income that they need every month to pay their bills. Some of it's coming from Social Security. Some of it may be coming from a retirement account. Maybe not. They've got a pension, but whatever they've saved, that's what they've got. And to
Yeah.
me, I think that's a very, very important part of this planning process that's often missed in the conversation.
Yeah, and I agree 100% with you, right? And I always look at it, and I don't know about you, but as soon as you tell someone you're in the financial services industry, one of the first questions that usually is asked to me is, well, how much do I need to retire? And if you remember, there was years back, there was a large company that had a commercial, and everyone had a number over their head. And the interesting thing in being in this business that I've found is it's not that number of what you need, like you said, in assets. It's really, the question is what do you need from an income standpoint? And I can tell you, the interesting thing growing up in Ann Arbor, Michigan, my father worked for the Ann Arbor Public Schools. My mom was an assistant to the dean at one of the universities at University of Michigan. And interesting enough, we always grew up thinking, we're broke. And it was funny because once I got into the business, I started helping my parents with some of their financial stuff. And the interesting thing is they did an amazing job of saving. They did an amazing job of making sure that their debts were completely paid down. And unfortunately, I lost my father last year around April. And but they've done well. They don't have that concern. But the interesting thing is some clients come in and say, I have to have $10 million to retire. And then you look at someone like my parents, and it's like, hey, they have a pension, which again really kind of comes down to and starts looking like a personal pension. The only thing you can do is an annuity because pensions are gone nowadays. But really, you start to look at what's the need. What does the client need in income on a regular basis to make sure that they are having the retirement that they chose, that they want, and that they dreamed about? Really is what it comes down to. So I agree 100% with you.
Yeah, I remember one of the workshops that I put together many, many years ago that I had several financial advisors utilize, really asked the question at the beginning of that workshop, what do you want retirement to look like for you? And then from that, how do we build a plan based upon what you've accumulated to see if we can make that happen or if we've got to make some tweaks in the plan because either you haven't saved enough or what you've saved isn't easily convertible to cash and we got to make some adjustments along the way. But it was that conversation of what do you want retirement to look like for you that really helped them set realistic expectations that they could go into retirement knowing exactly what they wanted. I remember my parents when they first retired, we'd had that conversation is what do you want retirement to look like? And dad said, I want to be able to take my mom and travel. Well, after dad sold the furniture business and mom retired from working in the healthcare industry for years, every summer I'd get a picture. Dad finally got him a smartphone and he started sending me pictures. And he's at Destin, he's in South Carolina. He's, down in Galveston and he's visiting all these places that he and mom wanted to go. And he'd send me a picture and underneath it, it'd say, "I'm spending your inheritance. I hope that's okay." And I loved it in the fact that my dad and my mom had taken the opportunity to think into what they wanted retirement to look like for them. And
Yeah,
when they finally got ready to retire, like you said, they knew what they were retiring to. And it wasn't that they were leaving work and trying to figure out what's next. They had already taken the opportunity to think about what's next. And as a result of that, that created a conversation that, in my opinion, needs to happen more often. And,
I
and Kevin,
agree.
that leads me to the next question that I want to ask you is this. What questions are producers, financial professionals today, not asking their clients that they should be?
Boy, you know what, John, that's a great question. And I think, a few of the things that we just recently talked about are, really some of the questions that I believe the financial industry has gotten a little bit away from. And it's, what do you need in retirement? Really trying, so I'm going to try and solve that problem. But really not just, asking the compliance questions of how much money do you have? What age do you want to retire? Right? Like driving down and getting a little bit deeper with these consumers because I think the biggest thing that we're missing is we focus so central on tell me how much money you have, right? And I think a lot of consumers have the fear of going and seeing somebody that's in the financial world because usually the first question that is asked is, well, tell me how much money you have and tell me the accounts that you've got and tell me where everything is, right? And kind of going through that. And they feel like I'm just getting drilled because they want to know who I am, what I am, and how much money I have. So really, right, kind of the conversation goes down to how much commission is someone going to make, right? Because again, the bad word is people do still make a living in this industry, but I think the biggest question that people are not asking is tell me what you want retirement to look like. Really, again, and I did have a client not too long ago, probably about a year ago, that came in and sat down with me, and we were going over his retirement plan. And he asked me this question, which was, do you guys help people that are about to retire figure out what they want to do? And to be very honest with you, John, I took a step back and I thought about it for a second. I went, no, we don't spend enough time talking, building a relationship with, and diving deep into who these people are. I mean, I think one of the other questions, and you kind of touched on it, is, the inheritance part of it, right? And you talked about, your dad sending that picture like, hey, I just spent your inheritance. Is that okay? I think the other thing that we're not asking, because right now we are in the biggest wealth transfer in history. And, the question is what do you want this money to do? Do
Mhm.
you want to leave a legacy? Do you have plans to help grandchildren to maybe attend a college or even a trade school? Or what is it that you want your money to do and the longevity behind it? I just don't think that we as an industry really dive deep enough into having that conversation with clients and consumers before we start digging into are they suitable for a product? Are they suitable for, our organization? And I really think that that's one of the big mistakes, that we make. And I can say I've been guilty of it. Right? You just start digging right into it, but really building a relationship because again, you talk about the inheritance part of it. Build a relationship, understand their family, who's in their family, who would be inheriting that money? Because the interesting thing that you really look at is those that are inheriting it. I think there was a study that was done, 70% of people that are inheriting money will not use the same financial advisor because the sole reason they don't know them.
Yeah,
They have no relationship with them.
yeah. As you were talking, Kevin, I thought back to one of my favorite questions that when I was doing personal production and then, I've done just some personal financial coaching in some of the churches I've been involved with over the years. And one of the questions that I would always ask that got some of the most interesting answers that I ever got from people was a very simple question. They would say, well, I want to do this in retirement. And my follow-up question would be, tell me why that's important to you.
Yes.
And then just listen to them talk. And sometimes when you would ask that question two or three times, you would really get to what they said was the issue. But then after you begin to probe a little bit deeper and ask those questions, all of a sudden you discovered that the real reason they wanted this outcome was far different from what they initially said. And maybe for them, it was the first time they came to the realization of, oh, that's what I really want. And that I think again is part of that missed conversation of being able to understand that we are human beings, not human doings, and we're meant to be in relationship with other people. And that only happens when we ask questions and get to know them at a personal level and understand, what their goals, their dreams, their aspirations are, what their fears and concerns that keep them awake at night are, and how we can bring solutions to that. And we mention that a lot. I want to pivot to the next question that I wanted to pose to you today, and that's as we look at the landscape today, and we kind of think about where we are as an industry. Do you see any? I think back to the book, Blue Ocean, Red Ocean, that was written many, many years ago about how many people, when they see an opportunity, everybody flocks to the opportunity, and it's like being in a pond, and all of a sudden, you realize there's a bunch of perch there or a bunch of bass there, and everybody goes fishing, and the next thing you know, they fish the pond out, and there's nothing left in it. Are there any blue ocean opportunities still out there that maybe are being overlooked or ignored where financial advisors can quit leaning into where everybody else is gone and the opportunities are now scarce and maybe you're getting an occasional nibble, but you're not having an opportunity to really make an impact? Do you see any blue ocean opportunities today?
Well, I mean, I think the interesting part is, and there's a couple things that we mentioned during our conversation. I do think one, and it's not new, right? It's been talked about, and I think there's a big miss in, marketing and really talking to the women population, right? And really engaging. So again, going back to my experience as a personal producer, the interesting part is you start having a conversation, and there's typically one person that's a little bit more involved in the finance than the other. And traditionally, what you do find, and right, this is more traditional, is maybe the man takes care of everything and really gets involved in looking at, stocks. And I do a little research here, and right, I love looking at betas and everything else that's involved in a financial plan. And unfortunately, what happens is financial advisors do not connect with the spouse. And the interesting part behind it is really when it comes down to it, what happens is when that person passes away, this person has no idea what it's supposed to look like, how it's supposed to look, where it's supposed to go. So then what happens next is kids get involved, and guess what? Son, daughter, whomever, they have a financial advisor and they go, Mom, we should go talk to this person because they'll explain that to you. So I really think, marketing in that category and really getting women involved and again, studies show that we're the largest transfer of wealth, and really the largest benefactor of that transfer is women. And if you're not connecting on that front, I think that's a huge, huge opportunity that financial advisors and producers are missing on a daily basis.
Yeah. When I got started in this industry back in 1987, 1988, one of the early lessons my dad taught me, who was a salesman, he and my mom sat down with me, and dad was giving me some advice on selling to really get started. And he looked and he said, Honey, do you have anything you want to share with your son? And mom looked at me, and mom was a woman of few words when it came to money, but she looked at me and she said, John, she says, I want you to remember one thing in every household that you walk into. She says, number one, the husband is the head of the household. But number two, and more importantly, the woman in that household is the neck that turns the head. And you need to not just pay attention to the head, but also to the neck, because at some point, that neck is going to become the head. And I never forgot that. And I remember that to this day. And, I was reading a study just this week talking about the fact that out of this $124 trillion that Sorelli estimates as part of this great wealth transfer, more than 54 trillion of that is going to go to women. Now, that's either the child or the grandchild of silent generation folks that are dying off, or it's the spouse of a boomer that's passing away. And one of the areas that we see that's another big issue, going back to what we talked about earlier, is education. Because the women were taking care of everything else in the household, for the most part, in the boomer generation. That was kind of what we saw with that demographic. The husband took care of the money, and the woman took care of the household. Well, now this woman has lost her parents, or she's lost the love of her life, and now all of a sudden she's having to take that financial responsibility on top of all the other things she's done. And maybe she understands some of the basics, but not the nuances as you were talking. So, Kevin, as we think about that from financial professionals, how do we have an opportunity to step into that situation and to deal with the grief that she's dealing with, the loss that she's dealing with, but also help her prepare so she can be a good steward of that money, but also be able to make sure that if there's a plan to pass it on, they pass it on with purpose? What would be your guidance and thought there?
Yeah, I mean, I think John, that's a great question, and I mean, I do believe that there's several situations. I think the first thing that it starts with again is as you're onboarding a client, right? Really starting to have that conversation, and not explaining like we used to talk to engineers, and the engineer wanted to pick apart portfolios and wanted to dissect products and so on and so forth. And unfortunately, well, again, whether it's male or female, the other person sitting on the sidelines, and we're getting really deep into the weeds. I think it really starts with the onboarding part of it and really giving that education and explaining the full plan to both parties, not just focusing on one. So really incorporating the family from that standpoint. I think the other part of it is the relationship and the ongoing relationship that so many advisors miss out on. The constant conversation. And it's not when an opportunity arises. It's not, I'm going to be there when so and so passes away. I want to reach out. It's that constant conversation. And I do think a lot of financial advisors just look at as I'm either an assets under management person or I'm an insurance guy and I sold you a product and I'm never going to see you again unless we have a death or a death claim. So I think really leaning into it is really building a relationship with the entire family. I think part of it really comes down to not just having the conversation with your clients, but really getting their adult children to come in and understand the plan and what we're trying to accomplish for mom and dad and how this is going to interact. Not necessarily just saying, here's how much money mom and dad have, but understanding the relationship there. Because, like I said earlier, 70% of inheritance are walking away from the original financial advisor because they don't have that relationship. They don't talk to and build a relationship within the family and really show them what they do and how they incorporate all the solutions and how this is going to benefit mom or dad, right? In a situation of illness, in a situation of death, and in the situation of ongoing income. And then the other side to it is, again, I think leaning into it really is building that relationship with the next generation to show the value of what that advisor and or producer brings to the table. And then that way you incorporate them as a client, not only when they inherit something, but during their financial journey as well.
Yeah, absolutely. If you think about the journey that we've talked about all through this conversation, Kevin, is the fact that the journey continues. And, if we sit down with mom and dad and we identify, what does retirement look like? Then the next piece is, well, what does retirement look like when one of you passes away? And now we're in survivorship mode. And then what does it look like when that second spouse passes away and the money goes generationally to the next generation? If that's your plan, what does that look like? So I think it's, as we've talked about all throughout our podcast conversation today, it's the dialogue, it's the conversation, and it's understanding what's important to them. I think back to the very first book I wrote in 1997, and it was a financial book. And one of the things I talked about in the chapter on estate planning was the fact that if you're going to leave an inheritance to the next generation, they need to understand what it took to create that inheritance to pass on so they can steward it and pass it on to the next generation. I think the same can be said for the financial professional. And you touched on it very well. If the financial professional is not showing their value and showing their worth and demonstrating not just to mom and dad, but to the kids and the grandkids, here are the plans we put together. This is the reason we put it together. These are why we chose these specific solutions and these investments that we made in annuities and managed money, whatever it may be, so we can create this generational wealth for you. I think we miss a huge opportunity. Would you agree with that?
I agree 100%. And even, kind of digging into from a solution standpoint, John, and, you know, I think the interesting thing is annuities are utilized, right, from an accumulation standpoint, not only from accumulation, but from an income. And sometimes in the situation, we plan really, really well, and those assets are not necessarily needed in the retirement situation. But really understanding, how do you then transition that to, right, from maybe the spouse, the surviving spouse, and then the next generation. So really kind of looking at the solutions that you have in front of you, where it transitions from, and what the tax implications can be as you go from, right, a spouse or a couple to a non-spousal, and what kind of solutions are out there. And I think one of the interesting things is, as Legacy over their 30 years have really thought about a lot of different things in there. And some of the carriers that we have nuances when you come down to non-spousal transition of assets, where a lot of carriers don't take that type of a situation. So really understanding where the need can go and how the transition would, and what the tax implications going to be from that standpoint. And you touched on it a little bit, even looking at some of the products that do provide income. We talk a lot about care and the need for long-term care. And you and I have had a lot of conversations in reference to long-term care, but not only just the annuity product when you look at it as just a solution for accumulation or income, but how can that impact, the down the road, where it's going to go? Is there a need for long-term care? And then when it does transition to that next generation, how do we transition it so that they're not just getting this huge lump sum and going, oh my God, our tax bills just went crazy? Like, having that type of a conversation. So I agree 100% with you that, it's not just the need of the now, and it's not, and again, it's a journey, but it doesn't end with mom and dad. It ends and continues down the road as it goes from one generation to the next, and making sure everything that mom and dad, spent their lifetime saving. And again, I say, my brother and I, we always look at it and we're like, well, we grew up poor. My mom and dad did an amazing job of saving. And it's interesting how that is, and really making sure that the statistics of spending inheritance within 18 months, whether it's a large amount or a small amount, really has that impact of moving on to the next generation and benefiting that next generation, and maybe even other generations to come. So I think it's a very important part of it.
Yeah, absolutely. My dad is about to turn 90, my mom 87, still enjoying retirement because they planned and they planned for what they were going to. So, Kevin, yeah, thank you. You and I could continue this conversation for a long, long time, and I've enjoyed having the opportunity to interview you. I've enjoyed having an opportunity to have you join the team and be a part of what we're doing. If folks have questions, they want to get a hold of you at Legacy, what's the best way to do that?
The easiest way is email. So kevin.meyer, Meyer, at legacynet.com. The other way is cell phone 707-787-0671. Unfortunately, we are on the phone quite a bit. So if there's a question that you have, leave a message or just a quick email is a lot easier just because it gives us the opportunity to respond. Again, I'm new with Legacy. I'm learning a lot. Like I said, 30 years in the business. I still learn something new every single day. So giving that opportunity to get you the full answer back is really it. But I am open for all questions and love the conversation that I get the opportunity to have with advisors, with marketing organizations, marketers. Just love all the questions that come in. And just again, I think the biggest thing is getting to tell the legacy story because it's an amazing story to tell. And I'm just absolutely privileged to be part of this organization.
Oh, absolutely. Yeah, it is a story that I love to tell as well, Kevin. So thank you for being our guest today. Ladies and gentlemen, thank you for joining us for this installment of Tune Into Sales. I'm Dr. John Terry, Director of Training here at Legacy Marketing Group. Thanks for joining us and have a great day.